Insurance acts as an extra life, reset button, or start over from the last financial save point when a car wrecks, cancer strikes, or catastrophe happens. But the current healthcare system, insurance market, and regulatory environment are making it more and more difficult for employers to provide adequate insurance to their employees. The lack of competition between providers and unreasonable cost of administrative services has led companies with a lot of employees to opt for self-insurance. OneUp believes that objective decentralization, automation, and disintermediation are the key to improving the health insurance sector. We're doing this by creating a better self-insurance platform using Quorum blockchain technology. OneUp doesn't insure you, we just empower you to easily insure yourself. Without the right insurance coverage, it could mean game over for someone's 401k retirement or even your entire business. A current market analysis will reveal how complex systems and regulation, overpriced quality of care, and high administrative cost for health insurance are leading a significant number of employers to choose self-funding arrangements using a third-party administrator, or TPA. The Affordable Health Care Act mandated that employers with more than 50 employees must provide health insurance with minimum essential coverage to their workers. All plans offered in that marketplace must cover the same essential health benefits, like emergency services, hospitalization, pregnancy, as well as 9 others. The decreasing value for quality of health services is indirectly attributed to regulation and lack of competition in the market. Insured can never get a straight answer about how much their medical expenses will be covered, and patients and companies are in a disadvantageous position when it comes to transparency on whether their claims will be approved, denied, or investigated. And finally, insurance company profits are up 25% from just 1 year ago. The ACA requirements resulted in many businesses choosing the cheapest insurance allowable just to stay in business, which may not have been in the best interest of their employees. So employers are choosing to self-insure. Self-insurance is prevalent in more than 60% of the workers of large corporations, most are union workers, and 15% of workers in small businesses. There's been a 30-year downward trend in the traditional coverage, and over 100 million workers are currently covered by self-insured plans and don't even know it. This is over a $200 billion market. Only 134,000 other TPAs are working in this space. They are currently earning $1.5 million gross revenue per administrator. There's over 525,000 businesses with more than 50 employees who are now required to supply that health insurance, which is just under 3% of the total business market in the US. And we think we can make a big impact because the top 10 are only taking up 2% of that market share. So, to self-insure means that employers must place assets in a trust so that when employees make medical claims, the claims can be paid by drawing on that trust rather than on the premium payments to an insurer. The employer effectively underwrites their own insurance, disintermediating the insurance company from the relationship with the employee or beneficiary. Self-insured employers rely on third-party administrators to assist them in the management of claims and paperwork. The TPAs only adjust according to the predetermined rules and are not required to make any judgment calls, especially between 3 parties or more. So OneUp is offering an administrative dashboard for the company to easily manage their own claims and paperwork. The smart contracts assist in the claims that are authorized and funds that are paid according to the predetermined benefits, which are the governance rules that can be codified into the smart contract and approved with multi-signatures. OneUp's platform also offers the ability for payment processing and automating these complex payouts involving 3 or more parties. The data infrastructure and analytics is a very valuable part of our platform, and it securely stores the health data on a private and permissioned blockchain. Employers are able to receive the aggregate health data and act on initiatives in their company that can help improve the health and cost for employees. XUP tokens can help to keep all the transactions visible between parties. Tokens traded on the Quorum blockchain track balances between the employer and the insurer who set the rules and contribute assets, the employee and beneficiary who is receiving the medical services, and the healthcare provider who delivers those medical services and receives the payments, and finally a third-party administrator who coordinates rule enforcement and claim payouts. Let's see what happens when insurance events occur from the submission process to the payouts in a real-world scenario. So Mario is an average guy employed at a plumbing company, and he is examined by his doctor, who sends him to the hospital because he's suffering from serious heart failure and needs emergency surgery. After the operation is done, Mario submits the claim to cover his expenses. The claim is submitted through OneUp's dashboard, and smart contracts work behind the scene to ensure the compliance with the hospital, the payments are made, and the paperwork is handled. At the end of the day, everything is automated and Mario is satisfied, as well as the employer who saved money. Our competitive advantages are lower cost for the employer, process automation, medication reconciliation, so basically more accurate data, robustness, and information and ontology standardization. OneUp's business viability includes seeking funds from venture capital or angel investors for around $540,000 over a 1-year period. $250,000 is the minimum requirement for legal and marketing fees, and approximately $290,000 for salaries and operating costs. Our KPIs would include acquisition, so how many new customers are we taking on, activation, what key steps are they going through to make them a paying customer, revenue, referral, and how many community members do we have. Monetization: one-time setup fee, $22 per employee, and an administrative fee per transaction, where you only pay for your services as needed. This is a key differentiator between traditional insurance and what OneUp is offering. So businesses will use the fuel as needed or upfront to conduct these transactions when buying these XUP tokens. For our timeline, the first quarter, we're going to set up the Quorum blockchain infrastructure. We will release a white paper and a website as well. In the second quarter, our goal is to launch the platform interface and smart contract development. In the third quarter, we'll see the payment feature launch and platform features complete, like automatic claim review and coin holder policy improvements. In the fourth and final quarter, we will work on marketing and partnerships. We will launch the product and we will expand to 20 paying customers or at least 1,000 employees. Self-insurers and TPAs have a lot of compliance to manage that otherwise insurance companies would take care of. Self-insured health plans come under all applicable federal laws. Some of these include Employee Retirement Income Security, Economic Recovery Act, Health Insurance Portability and Accountability Act. OneUp offers the ability to meet the compliance of all of these federal regulations in the smart contract feature. OneUp's platform comes in 3 technological layers: the smart contracts, the payment, and the data infrastructure and analysis that we mentioned earlier. The Quorum blockchain is able to cover all 3 of these areas. In distributed ledger technology or blockchain, you're able to create an environment of cooperation between the employers, employees, and service providers without using an intermediary like an insurance company or a bank. Some of the Quorum features that will help us accomplish these things are the open-sourced permission blockchain, the private smart contract execution through the Constellation engine, a configurable consensus, the settlement finality, and the governance that integrates with the real-world identities. In this slide, you can see an example of all 3 parties and how they would interact on the Quorum blockchain. You can see the relationship between payouts and encrypted and decrypted messages so that information is kept safe and owned by the employer or employee, not the insurance company. Just like Uber can be the world's largest taxi company without owning a cab, and Airbnb can be the largest accommodation provider without owning a hotel, third-party administrators could someday be the largest provider of insurance without being an insurance company. OneUp is a decentralized TPA platform that is based on distributed ledger technology. Thank you for listening.